Hello and welcome. It is the 24th day of July 2019. My name is Derek. This is the Money Charts channel. Like always, all bets, trades are alike within each his own risk and their own reward. We'll do a gold and silver video. Gold doing poor lately, below 15. Litecoin, 14.82. That's how many Litecoin you need to buy an ounce of gold. And volatile movements, to say the least. Nice little downtrend in here, as in, well, you can draw a line and it hits it over and over, and it's not straight. And what I like to do, and I'm not doing it now, is I'll get the rate of ascent for one, then do the exact same rate of ascent on the upper end, and they look good. But it breaks that, and then it supports it for yet another downward range. So just a little interesting. It's now, of course, broken again. Below that support, so we see volatility, 16 down to 14 and two thirds. Just like nothing, gold loses like 8% in a few hours. That's normal. Against Litecoin, it's normal. And it's part of this pullback because gold had a beautiful rally from July the 10th all the way up to the 16th. The cleaned this nice gap open on the 14th. Price action, price of gold almost doubling. Yeah, does that a lot, as it should. And since the pullback, what's happened with gold? Well, hanging in there within the 18, but obviously didn't go up too high compared to this level, and a decent sized pullback. Still above this low. I suppose if we break in or break down below it, maybe we'll go in between this area. But just looking at other different time frames, 8-hour chart, and well, there's the low there, and it's just chopping back and forth, up and down. And well, right now, after coming down this 18, it's been sticking in there for a while, resisting the highs, and it's a support test on the lows. Really, it's like an anybody's game situation. The type of market I look at this, I'm not trying to predict it. Daily chart, well, gold has been getting its ass kicked. I mean, what a big bear market for gold. It was 54 at one point. You needed 54 Litecoin, 55 Litecoin for an ounce of gold, and then it goes down to under 10. So gold loses 80% of its value, like it occasionally does against Litecoin. And it's been slowly rallying. It's got a long ways to go in filling this empty space. It's hardly filled much at all. When we look at this on a 3-day term time frame, well, the volatility is most certainly in play because it's been a spectacular rally for gold from the start of 2018. I mean, it was really cheap to buy gold. You only needed 3.5 Litecoin from 1 ounce of gold. Then it was 54. Now it's 15. Back in here it was 10. Looking at the weekly chart, it was 800 at one point, and then for the longest of time, it was about 300 and change, a little over 300. And trading Litecoin for gold. I mean, I know I'd have to work. It would be a little hard for me to turn gold into Litecoin, but I'm sure I could do it if I needed to. It's extremely easy to turn Litecoin into gold right now. Physical, real gold, that is. And of course, physical, real Litecoin. Literally. You can. Cryptos are mathematically, I mean, they're real. But so is gold on a tangible level. Now, think about gold, its real use case scenario. How much is it worth based on its price? How much is silver worth based on its price? And how much is Litecoin really worth based on its price? Litecoin is the best as far as monetary exchange, but I can't make solar panels with Litecoin. Now let's take a look at gold. Not against the dollar, not yet. No, let's take a look against palladium. And on the weekly chart, let's just go shorter term. Let's do daily. We'll go back to it. A little more of its choppy up and down action. Interesting how this one even number is working out, though. Right now, you need uh, 1 ounce of gold will get you 0.92 ounces of palladium. So gold's not as it's cheaper. Then play. And back in here, it was 0.81. Nice little setup there. So looking again at the weekly chart, straight down. Monthly chart. What do we? Anything here? Well, the volatility. The low, we got it at a quarter back in 2001. It's high, a little over 5. 5 times 420. Decent volatility. We had a lot of the support in this area here around 1 and 3 quarters. And it held and stayed above it with this down move here at the end of 2014. But since this top, it has been uh, all palladium. Let's just, for some fun, we got a quarter low and we got a high. We'll do 4, we'll do 5 even. And put some Fibonacci retracement in, so we'll put 25 in as a quarter. Was it 5? What's the upper number? Yeah, 5 even, so 500 would be. So key numbers would be 1.59 and 0.79. Let's just put those lines in there just because I know how. That's just luck. Okay, so it started with this high. It did pierce extra above. So, I mean, cryptos don't do that often. I mean, cryptos are terrible at doing that, which is piercing a little above key Fibonacci number. But technically speaking, it kind of didn't because it kind of congested it on 2 different occasions afterwards, at least on this support level. What's our current low at? 81. And I'm looking at this chart for the first time. I'm going to look at gold against platinum too because I've never looked at that on here, so I'm going to look at that for the first time as well. 81. Okay, well, we're not there yet. 79. Well, yeah, that's a pierce above. That's a pierce above. But we're probably not there yet. We'll see. We'll see. We'll see. And because I can come back to this, I'm going to put this Fibonacci line in as well. A 0.79. So you can see another pierce to it. But when you see it breaking down below it, oh, where are we going? 79 handle. And it's been 2 basis points from it so far. Now let's take a look at platinum. You need 1.62 ounces of platinum for to buy 1 ounce of gold. And a nice little run for gold from this April rally in here. Just retracing a little bit of it in here. 3-day term time frame. Well, twice hit area of support, at least from the start of this correctionary move down. And this is one of those fun things about technical analysis. And when I say fun, it usually isn't if you're trading it this way. I mean, if you're trading the ratio back and forth, so be it. It's great, but not. Anyway, you have this failed breakout. This is obvious, and you know what? That's profitable because if you could tell that this was a failed breakout, it had a good failed move lower. But that's exactly it. It had too good of a failed move lower, and that's what I'm referring to. Because all the time I talk about stuff where it needs to hold a certain area, and if it doesn't, watch out. And this is the one where it didn't. So it broke out above here. So the must hold area was this general area in here, which really did cause a failed breakdown. But as the market was breaking down below here, it looked as if at time it probably should have. I mean, we're coming up and resisting later, yeah, but once it got above here, it pretty much told me the move from this high to this low was a failed move. And I mean, usually it's not going to do what it did and continue on. That's one way of getting up there. Another one is maybe just goes to previous high, pulls back and gets there. Maybe it resists at this point, does its thing, and takes more time, but it has just continued to go straight up. And that run is now over. At least it's in the correctionary mode. And it's actually kind of losing it, but it's still got an opportunity to hold and stay above it. However, it's got a nice little move below the 18 lows. On the weekly term time frame, it most certainly is in a correctionary phase. You can see again, it's just uncommon in an uptrend to have this kind of move in a leg higher after, but I see it on this chart as it is. It did not find successful support here, but it was, again, the failed breakdown. On the monthly chart, gold has just been kicking ass, obviously. Oh, this 18 average, how this is playing is kind of like funky, I guess. I don't know. We have this high here at 1.14. which is in the 2012 high. And then you have this price correction, a very good price correction in here. Oh, big time. Because when I draw one of those horizontal rays, we can see it like that. This resistance, which was resistance here again, but successful correct, very good successful correctionary mode. Got above it, established this level, had to come back to where it came from. And since then, it's been off to the races. And within off to the races, how it's playing within the 18 is to me pretty cool. First, after it leaves it, you have this straight up move. So you first go your correctionary mode, and it hasn't left it. It's attempted to on many occasions, including now. But since the correctionary mode, you have your first move up to the lows. Barely trying to get above to the low. Barely trying to get above. Again, barely trying to get above. Close to the lows in here. And then barely staying above. I mean, this is what we'll start trying to do is break out of this pattern. And it's grinding its way higher in the process. There's a good 18 average correction low test again. And then to quickly get back not only to the highs, not resist there, but get above, technically get above this and hold it. Just rate of ascent is so minute, but it's getting the job done to price action just slowly but surely when looking at it from this measure. Okay, that's gold versus platinum. And next up, the Canadian fiat currency, then the US fiat currency, and then the silver not fiat currency. Okay, so we got this established resistance here, June 25th, and a beautiful set of correcting within the 18 in here. This is just remarkable how it's been trading in this. But since this move higher, how has it reacted after the fact? Well, instant red candle down day, back to where it came from. But since then, holding in there, a lot of pausing, extreme low volatility, but meanwhile, still keeping an uptrend live within this market. So, still very good holding with what has been a spectacular uptrend since the late May lows. On the triple day chart, we have these lows back last October. Nice little up run going from 15 up to about 17. And in the sideways range, we established support at 17. We originally established resistance at 1759. The resistance got upgraded to 1772. It congested there for 3 days, or from this high. And when it broke out from this point, had a very good up day of 2%. And then just had a couple days pausing, no big down days, and then, okay, it's breaking out. And it's not a surprise you have a very good gain when it breaks out within how the market looked in this. The setup said it was to do it if it was not a surprise, or probability odds for a good gain was higher, and sure enough had a good gain. Since that good gain, coming back to the 18 highs, holding in there for a few days, but just nice little grinding its way a bit to the upside. Weekly chart price action is extended above the 18, but we can see a little bit of correctionary mode within it. Still, and if it breaks out above it, just like before, probability odds of a superior gain is most certainly a lot higher as it normally would be. And it gets even more extreme amongst the monthly term because just looking at this in here is huge. Like I know I don't got all the data, but it was in an uptrend. This is the first time ever gold ever seen anything near 1900 Canadian. And from that point, you have what worked out to be a beautiful ascending triangle. There's this terrible line, but support and resistance. And if broke the support, just one leg lower, that's all it was, but gets above the 18, how did it react after it? Because that's what I talk about for what would be resumption of trend, not reversal. Because band one, stage one, band flatten out. Stage two, in Canada anyway, establish support. Stage three, come back to the band. Stage four, well, never attempted to break below. Oh, what's this? We're getting above the 18. Okay, so you're attempting to resume the trend. Okay. Stage one, attempting to do it. Stage two, establish resistance. Stage three, come back to the band. Stage four, take it out. So really, this has just been in a bull market for the most part. But as it goes, you know what? I really do need to see a break of this level of resistance, but that's what we're attempting right now. It's at that high for the first time since. Maybe it breaks it, and if it does, the moves can be huge, especially in the U.S. It's breaking a key fib point. It could just go up huge as well. But there is 17 and two thirds is a major area for where resistance was, or where it would be. If I say, oh, where do we come from next? 17 and two thirds, 17 and three fifths, 17 and a half, anywhere in that area. Where gold here against the US dollars has already broken established resistance. And it's one of those spots where I usually say when it has this type of break, it's usually fast. You've had all month to know, hey, people, gold is going ready to go. And I've even been stating for a while now, for many weeks, even before it broke the neckline, that this thing is going to probably do well. And I bought a little bit, not much, but a little bit of real physical gold because I figure it's going to go up. And I hope that it surely slowly does because I want to accumulate more. Of course, I refer to that as Litecoin beating. It's a race. Litecoin versus, and cryptos for that matter, cryptos versus gold. If cryptos can have a big gain or a majorly overperforming gain in other terms as well over gold in the near term, then that would work out with the intro chart that I showed. If that crashes on it and it goes lower and you need less Litecoin to buy gold, well, I'll turn it into such. That's Litecoin into gold. But nice little move, resistance here, 1522. If it breaks through that, I'll have a little bit of intermediate or on the way resistance coming in at 1669, and then again at the previous high about 1900 on the daily term time frame, pretty much a lot the same as far as the Canadian chart. Breaking it above this resistance and now holding in there amongst this point, getting it above the 18 average of highs, seeing it holding and staying in the low 1430s, and seeing it accelerating north of 1440. Don't be surprised if that thing gets off and has very, very, very good moves. Let's take a look at what gold looks like against silver next. And it's been a slew of these red down candles. This is interesting. Like one after another, it just doesn't stop every single day. July the 15th, down 1.19%. Next day, 158. Day 3, one little over 1. Day 4, pretty much 1, down 0.98. Day 5, down two thirds almost. Day 6, down 0.87. Day 7, 0.78. 0.58. 1, 2, 3, 4, 5, 6, 7, 8. I might look at data if it gets to this. When's the last time there's been 8 consecutive days in a row where this has went down a half a percent at least in each day? And right now it's down 0.21 to start this day off, which would be actually the day for Thursday, as it's 2100 hours right now, minus 4 UTC, so that's 25 hours UTC, or one hour after midnight. So it's already a new day there. I mean, I find it very, very interesting, very, very fascinating. I mean, there was a little bit of a straight down decline in here. Let me just see if I can see anything here other. I mean, there really isn't too much in here. I mean, I'd have to probably go back. I mean, this is not much compared to before. And I mean, this would take a long time to go back. The best way for me to do this is use my spreadsheet to calculate data, given how many days there are, and the fact that I have data going back a lot further. But I'm not going to do that right now. But if it continues, it's going to entice me to induce me to want to do it. But as it's been going down, what does it mean for the longer term time frame? 3 day chart. Okay, now it's back to where it came from. In this area here, we had this double really hit resistance in at about 85, at least on the recent term time frame. It's had a good net break, convincing break below the 18 average of lows. And now that I say that, I got to talk about the 3 step thing because sometimes, and this is rare, we see this, and that's why I like to talk about the 4 steps because it's not often it goes like this. So it usually works. This is one where, okay, stage 1, band flatten out. Okay, that's stage 1. Stage 2, establish support. Well, 3 little bears, too much, too little, just right. Well, it's not too little and it's not just right. This is too much. And if it keeps going, it keeps going. Also, of note, and I don't know how much it means like as a gold to silver ratio. I think this would mean more with charts against the dollar and against Bitcoin and such. But when something keeps going straight down like this, you are in turn possible any decent sized green, but more a large sized red candle could happen at any time. You're ready for a possible like a move like this at any point where 7, 9, 12% or whatever. I mean I doubt it, but that you're more in line for that when you're in this crash level. And at some point, if you're trying to revert the trend, at some point you just have to say, okay, it's reverted, and what do you do? And in portfolio switching, do you just buy something? Do you sell a code like? I mean, do you sell when something goes straight down like this? Not really for me. So it's just one of those uncomfortable spots that a lot of times I have. But as a ratio trader, moves like that don't. I love those as a ratio trader. Um, but as far as trying to read charts, they're not fun. So on the weekly term time frame, this is what I've said. I don't like to see when if it doesn't support a move and goes down this fast. I mean, it's kind of whatever. It can still hold and stay above it, but I mean that's convincingly breaking down below the 18 average of lows. There is a lot of this empty space, and it still hasn't came back to where it came from here. On the monthly chart, this is just a good sized red candle, and the possibility of a failed breakout. And it's only at the first stage of its correctionary level for the 18 average of lows is in at about 83. But when you look at it from this type of perspective on the monthly, it has came up a long way, and it hasn't came down that much at all. Even though the daily time frame sure looks pretty cool as far as its actual look. My feelings, and a lot of it is backed up by science and mathematics. First of all, first one's no theory, and that's 16 to 1 is historic, and it's actually a place where most recently was back in 19, like around the 1980 time frame, 16 to 1. And it was down to 32 here. Again, that's no theory, whatever. But as far as where I think it's going to go, I think it's going to go into single digits. And I think that the fair price for it, I can argue. I mean, I'm not going to say I know it's this, and there's no other facts. And scientifically, it's this right now. Not even close. But I can make a case in trying to find the scientific facts for where it is. That 10 is the number. 8, 9, 10. But I can also make cases for 1. Or most certainly I can make a situation in the future where one can be trading. And when I'm going through all these facts, one of the things I'm going to talk about within market movements of charts is they oftentimes, these prices will go way higher and lower than where fair value ought to be in trader emotions. And I mean, we see that all the time within the crypto markets, but most certainly here. So when I think that gold to silver ratio is going down to 1, to think that I think it should be, no. And as a trader, I know it's not going to be the right price. And I mean, I'm not going to be like, I'm going to wait till 1 to sell silver for gold. But I'm going to be looking at time frames where I would. At 16 to 1, yeah, a little bit. 10 to 1, start to get aggressive. 1 to 1, I mean, that's like, how can it go anymore? It's almost like, do you sell everything kind of deal? And when I say mostly everything, I mean, I got like, maybe I only got like 500 ounces of silver left. Okay, let's sell 400, 300 of it for gold. Okay, the ratio's back up to 8. And of course, in between, I'd be maybe doing some more. Yeah, of the 300 I just bought, yeah, that's on liquidate 150, 200 of them, buy some silver. Oh, well, look how many did I get back? And I mean, stuff like that would be things that can be done. And hopefully, gold and silver can make its way on the blockchain successfully. I don't know how you would do it on a decentralized level, but it could definitely work on the blockchain. I mean, that to me is a no-brainer. That's easy. But nobody's done it. Nobody's put up a pool of a lot of gold, a lot of silver, and then make it available on the blockchain. You need a lot to do it to make it, especially it's a big world. Let's take a look at palladium and silver ratio next. Start off with the 3 hour time frame, and well, palladium ratio was over 100, down to 93 on the daily chart. Really? I mean, that's all that's been going on in here for the last few days. I mean, decent sized down moves here. I mean, what's this volatility? High 93.46, low 92.75. That's like nothing for volatility. If I don't know how accurate this data is, it's about 0.8%. What's the move here down? 3.37, 1.92. Well then, that's just really you can see compared to before how much it is, but as far as the movements on this 3-day chart, palladium is kicking ass against all the metals right now. It's the best metal on the market right now. It has a lot of properties too, but it's a lot more expensive, of course, as you can see with the 93 to 1 ratio, but it just keeps going up. Monthly chart. Okay, same thing. Let's do fib. Just because I know how. The high here is $240.70. And I haven't seen this chart. This is the first time I've ever seen this chart since I've last made it, because I have made it before. I can't say that. And the low in here. And it's a multiple hit low. I don't want the exact one for this. I want 14 and 2/3. Key numbers 42.72 and 82.68. What's above that 82.68 number? It's not resisting it. Interesting. Okay, 82.68. It supported it. We'll take a look at it a little more clearly. And as far as the previous number, 42.72. Let's get a line in now. I don't know if I push it. No, I'm just going to push it now. There we go. Alrighty. Settings 42.72. Well, I mean, it didn't resist much here before. It had a nice little break above it, and I mean, it congested within that area, so it could be processing a similar thing right now within Fib. So, what's the likelihood that 23.6 is around 27? 28.39. Okay, pretty much around it, I suppose. Makes even more sense at 28.39, I guess. That's even a better number, too. Okay. And now the 76.4 tells me where the breakout number would be going to. And that would be 124.39, 124 and a quarter. So if there's any more leg higher, that's an area I'd be looking for. We'll see. Something I don't own any palladium, and it's a frustrating thing because I was going to buy some before, and I was about to buy it too, and then I noticed that the price was like I went to check out and buy palladium, and I'm like, geez, that's expensive. And then I'm looking, I see the taxes. It's you don't pay taxes in Canada. You don't pay taxes on silver and gold bullion, but you do on palladium bullion. That's not right. But so I didn't buy it because of that. I kind of regret it a little bit, but whatever. It's okay. It's something I want to get into, and that's something I probably will in time. But for now, I don't have any. As far as palladium does go against the dollar, hey, it's doing pretty good. Had the support here. We had this resistance range that I talked about back in the day for so long. And back in the day, it's been for over a decade now, or about a decade, almost a decade, not quite. 8 years, maybe a bit more. So a while. 827 range to 1,000. We contangled in that area from 2018, and it's just now recently broken, and it's hanging in there with a nice little break above resistance. Okay, the three little bears, too small, too big of a move, just right. We're just entering just right because, quite frankly, just moving in here, that's not that much of a move. I would like to see at least it go close to 2,000 into an area where it's like, okay, this is. But is it? We're talking long term. If a market is going to go from 2,000 down to 160, then these levels too much is only short term, intermediate term levels only. I mean, long term, the levels where this thing can go, breaking resistance, is quite phenomenally high. Several thousands of dollars, and there's nothing far fetched about saying, well, if it goes extreme, maybe we could hit five figures or a 10x move from break of resistance. I mean, we did have 144 to 1,000 range. That was about a 7 to 8x range. So if it's able to do that, by all means, It could most certainly have phenomenal moves of that nature, especially in situations of devaluation of fiat currency to major levels. Where if gold goes to 5,000 and silver has these moves going to like several hundreds of dollars, then what's palladium going to do? We'll see. And now let's finish it with my favorite metal, silver. I'm not going to talk about platinum. I'm not a big fan of it anyway. But hey, if you hold platinum, I would much prefer platinum over fiat currency because gold goes up, silver goes up, palladium goes up, cryptos go up, all because of fiat currency. You suck situation in news. You're dying, you're losing major value, hyperinflation, at least major inflation, or signs moving and leading towards hyperinflation. Then palladium or platinum will do good. But this is silver right now. So, okay, we're at 16 and a half. Okay, fine and dandy. This is good. We're at levels not seen since when? Okay, back to 2018 June. We're at highs, 13-month highs. Whatever. Now this was an interesting congestion area in looking at this. And because I want to draw, I'm going to change the drawing on. I'm going to change this to XAGUSD. And I want to keep those fib lines in because I'm going to want to draw a whole bunch and then I go to right click remove drawings. There we go. Nice. Put in a horizontal ray right here. That represented support that we've seen back in May of 2016. At the end of 2016. It almost hit it in May of 2017, and then the summer of 2017 it did. And then at the end of 2017 it did. And then it broke down below it in the summer of 2018. Always at this July and December, but anyway, at least it seems. And we're in July right now, which is kind of interesting. But throwing that part aside, it breaks key support and has a good leg lower coming close to previous high. It's a pierce above match of this level. And yeah, I mean, I guess I suppose I should go 3 day from this point on because I don't need. I can. So that was the little bit of the support area. What was the resistance? It was not horizontal. It was not. It was in a downtrend. It had multiple rates of descent. The first one we had this downtrend line, and then we had this downtrend line. So breaking it, and then we talk about those either or failed breakdown. So this is interesting because this is almost a double failed move in a way, or double failed breakdown because here's that boxy thing that I like to draw, which indicates when I draw a box like this, that means failed move going down or up, and of course this is down, so failed breakdown. But you know, when this happens, it's one of two things. It's a failed move, and a failed move is like I say, you break a key support, you have this good move, maybe you spend some time like this, if this case it did, and then you usually quickly go back up to where you came from, which is in here. Okay. Now, when it does it to this one of two situations here, it's either the failed move. If it's a failed move, you got to expect price to get back to this congestion area, which it didn't do back in the start of this year, at the end of last year. Didn't do that. So now it's going down saying, okay, so on a true non-failed breakdown, if this is a real break of resistance, then the steps in making the moves lower is one, you have a good break and establish a new support level. So a good break below where you came from in here. And that's a good move. That's about a normal size move, not too small, not too big, just right. And then, I mean, you don't have to, but you have the option to come back and have a play to where you came from instantly. The instant come back to where you came from. Okay, there you have it here. And if it obviously that's on a failed move, it doesn't do that. Oh, okay, you're not doing that. So that's what it was telling me that it was doing. And then this price action came back in here. It's like, yeah. So in here, when it didn't resist this point and go lower, and especially when it didn't resist this high and do what we're looking on the failed move, is come back to this congestion area, which is from the line at basically 16, a hair below 16. And really, if I do put a horizontal ray area, I'm really looking at the 17 low change area. I suppose maybe 17 and a half, but it's got to get above 17 and a half at least anyway to leave previous congestion area, which is where it traded pretty much through all of 2017 and most of 2018. Okay, that's actually an interesting thing, I think anyway. On Did we look at the daily yet? I mean, it's been going straight up. It's looking good. Yeah, that's how we started off with. Weekly term time frame, pretty much a double bottom. It's like two U's, two V-shaped formations, but it's breaking the neckline. We're not resisting this area, so holding and staying above this to me really important. If we top in this area here, I want to see it hold 15 and any come back at about 15 and change, 15 and a half. If it continues to go higher into congestion area, like say into the 17s, well now I'm going to upgrade its hold area to about a good pierce below where it came from at 1628, which is about 1580 or so, 15 2/3. If it just keeps on going up to say 21, then I want to see it hold and stay above 17. And if it goes above that, I'm going to need the monthly chart. So if it goes above 21, say if it has a fast move to 26, well, I want to see it hold and stay above about 19 or 20 on a pullback. If it were to go straight up to say 39, well, now maybe in around 22. If it goes straight up to 50 in one shot, I really want to see it hold and stay above 25. If it were to go straight up to say 100, 110, I want to see it hold and stay above 40 or so. And if it were to go straight up to 1,000, I would really like to see it stay and hold above 150. But I don't think it's going to go straight up to 1,000. However, as we can see, here we have gold looking a lot better on its chart. But hey, we do have price action for the first time since 2016. At least get noticeably, because I kind of don't count this, but really get above the 18 average of highs. So it's the first attempt in reversing this trend. We'll see in time how it goes, but I spent a lot of time on this video. I enjoyed making this one. This one was pretty cool. Fun to do. But for me, silver to me is the most safest, best investment, I think, best of anything at this time. That's my opinion. And you could say, well, is there anything safer? Well, what would be safer? Gold? Uh, I don't know. I have a hard time believing gold, especially when I calculate its reward factor. I have a hard time with that, especially and the tangible use. You mean you can use gold, and it has a lot of magnificent uses. Problem is, a lot of gold has been stockpiled over the decades, years, decades, and silver. A lot of it has been used, and I do think there's going to come a time over several months where the need for physical silver for industrial use to melt silver will get so high that a lot of physical bullion holders are just going to be, the prices are so high, how can you not? And it's just going to work out that it's going to be sold because the demand is going to be so high. And fiat currency, the way I think about it, if I were to put any one asset class in a safe, and I say this all the time, but it's to me it's so true. If I were to put one asset class in a safe for 10 years, even just for 3 or 4, 20 years, I don't think I'm going to be too confident within anything else but silver. Gold, you know what's going to be good. Palladium, that should, palladium would be fine as well. Platinum probably would be fine. But do I want to hold fiat currency in there? Do I want to hold private keys to any Bitcoin, Litecoin, Ethereum, Ripple, Theta? I don't care. You name it. Not really. I mean, obviously, the best way for me going about it would be if I had that choice. Well, can I put a little bit of gold in, a little bit of silver in, a little bit of platinum in, palladium in, some Bitcoin in, some Litecoin in, all that stuff. Yeah, even put a bunch of those paper rectangles in. Yeah, just a little bit. I mean, if they're worth nothing, well, then that's fine, because the other ones would be worth something. But to me, if I were to take a time machine and go 5 years, 10 years, 20 years in the future, I would not be surprised to see Bitcoin under $10 or over $1 million. For silver, silver is most certainly going to be valuable. To what degree? To what's the form of money? Dollars? Maybe they are so. How much a loaf of bread would be? If it's in dollars, I don't think it's going to be cheaper. But anyway, thank you for tuning in. Have yourself a great day. Bye bye.